Our view is interest rates will rise next year, multiple times.
Currently, it is Russia's deliberate choices and aggressive actions that continue to destabilize security in Europe.
The discussion between President Biden and President Putin was direct and straightforward. There was a lot of give and take.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, and here's what's coming up on today's program. The Pfizer shot provides less immunity against Omicron in early study, while the first indication of the effectiveness of vaccines against the variant. A changing of the guard. Olaf Scholz is set to become Germany's new chancellor today. We'll be live at the Bundestag. And stay with Bloomberg Surveillance Early Edition, because this hour we'll discuss the luxury space with the vice chair of Salvatore Ferragamo, Michele Norsa. We also speak to the chief executive of the Saudi Stock Exchange, Khalid al-Hussan. Send in your questions on IB Plus TV Go. Now, first thing is first, let's check in on the markets. And this is the picture across the board. We're seeing a robust, healthy increase once again when it comes to equities. It's the third straight day of gains. You can see 0.4% for the European Stock 600. I have to say, it's only the DAX that's a little bit of an outlier call. It's down a touch, but overall, if you look at the FTSE and if you look at the CAC, they're gaining some 0.4% as well. Health, one of the biggest gainers in today's trading session. There are two things, actually, that the markets take in their stride. First of all, they seem to worry less about the variant because we've had this initial trial. We'll speak to our Sam Fazeli to really break it down if it's as positive as the markets think in just a second. And then we also had some policy from China that could help support some distressed debt when it comes to real estate. Onshore yuan, something that we need to look at, currently at 634.77, and then crude oil after the rise yesterday, 71.70. Now, this is the map of Europe. The only one that's, not seeing a lot of gains is the DAX, but it was down some 0.2%. Now it's pretty much flat, and we're seeing some pretty robust gains elsewhere. A bit of fluctuation also for the FTSE MIB over in Milan. Now, a new study has revealed that the Pfizer vaccine provides less immunity to the Omicron variant than other strains of COVID-19. However, South African researchers also say a third dose of vaccine still offers a degree of protection against a highly mutated variant. Well, joining us for more is Sam Fazeli, senior pharmaceutical analyst for Bloomberg Intelligence. Sam, the concern is that a lot of times the market wants to be binary, and they want to know, is this good news or is this bad news actually for the world? But it's a lot more nuanced, and you bring that nuance. So how do you look at the trials?
It is, Francine, and this study pretty much gives people a bit of good news and a bit of bad news. The bad news is that, as expected, the Omicron variant can evade antibodies that are induced by vaccination. Is it 41-fold lower? That's what this study shows, but it's only 6 people. On the other hand, in the same study, they found that people who had been infected and then vaccinated had a pretty high level of neutralization, actually. So to me, this says that a booster shot should, if it follows the same logic, provide us meaningful protection against infection. And this is all we're talking about here, Francine, infections, not necessarily anything to do with serious disease.
So, Sam, but if this spreads so much, quicker than the other variants, how much hospitalizations could we see? Is it difficult to extrapolate? Can we say with certainty if a lot of the health services will be overwhelmed or not at this point?
We can't, but if the infectiousness of this virus is as high as it seems to be at the moment, you end up in a situation where a small percentage, i.e. even still protection against hospitalization, of a very large number still ends up being a very large number. So that's what we have to gauge as time goes on. And hopefully, as I said, these booster shots will prevent that massive surge in infections because your level of antibodies are that much higher as you encounter the virus.
Sam, talk us through exactly the timeline that we should be looking at. So, how many people will get a booster shot roughly in the next month? And then when can we hope for maybe another booster shot that would help with the specific variant? How long does it take for Pfizer to come up with that?
Yeah, I mean, the UK, if we're just talking about the UK specifically, obviously it varies across different countries. It's already at around well over 20 million third shots having been delivered. But of course, there's a long way to go still. But I suspect that a lot of the more susceptible adults have already been given a booster shot. And then as for an Omicron-specific vaccine, if things go well, I think we should be expect to see a lot more information and news on that as we go through the first quarter, with doses possibly available starting in the second quarter.
All right, Sam, thank you so much for all of your insight, as always. Sam Fazeli, Head of Research at Bloomberg Intelligence. Now we're joined by Althea SPINOZZI, Senior Fixed Income Strategist at Saxo Bank, and Bloomberg's Christine Aquino to talk about the markets, the variant, and of course, everything in between. So thank you, Christine. Thank you, Althea, for joining us. Althea, let me start off with you. When you look at the market wanting so badly to buy the dips, is there anything that would start at this point to see a correction given what we know about Omicron?
Well, Francine, the point of Omicron is that it keeps long-term yields in check. And it is that only distortion that is actually doing at the moment, that is doing that and is giving supports to risky assets. The point is that real yields continue to be deeply negative, and things can change once that fears surrounding Omicron ease, and we see the market focusing much more on the tightening agenda of central banks globally, especially the Federal Reserve. You see, once that the Federal Reserves begin to discuss about entering an interest rate hiking cycle, at that point we can expect higher nominal yields, lower break-even yields, and that means an acceleration of real yields.
Yeah, and I want to ask you also go to Jeff Gundlach and what he's been warning about in a second. But Christine, when you look at some of the market's reaction functions, it was interesting, and you pointed this out, European stocks gained 2.5% yesterday, which was the most since we had news of the vaccine a year ago.
Absolutely, Francine. And I think that really speaks to what we were talking about as well, where the markets are at this point very much open to receiving good news, right? And this is probably also a function of what we saw last week, right? When Omicron first hit the market's radar, it was very much a sell first, ask questions later sort of mood. And now it makes so much sense that we're seeing this reversal of that, because Omicron, I think, is turning out to be not so much a tail risk sort of negative factor for markets, and that's completely different from what they initially thought. And so now that we're kind of paring back more towards the middle ground of this, yes, this is a risk that they should be watching out for, but no, it's not an outsized big negative tail risk, then we're seeing this reaction in markets recalibrating itself, really.
Now, Jeff Gundlach, I mentioned him moments ago, also seeing some rough water for the market as the Fed pursues, of course, taper. The Double Line Capital Chief Investment Officer also urges investors to keep an eye on the recent slump in high-yield bonds. Well, he says this could be a canary in the coal mine for risk assets. So, Althea, what is your canary in the coal mine to see for something ugly happening?
Well, definitely, we remain cautious, especially on weaker credits. But the point, Francine, is that as I just mentioned, high-yield corporate spreads remains quite tight. They are trading around 300 basis points, which is where they were trading before the global financial crisis. They are widening, and the reason for widening is that we see volatility in rates. But until we don't see those real yields rising, it's unlikely we see a widespread sell-off. What is interesting, though, Francine, is that the widening of investment-grade corporate spreads has been faster than the widening of high-yield bond spreads. And that suggests that investors are looking for yield, trying to get the lowest duration as possible, which can be found only in the high-yield bond space at the moment.
Yeah. And Christine, when you look at some of the break-evens, I mean, what are your inflation expectations? Like, what are people talking about it? Our Dan Curtis sent this wonderful chart, and it really kind of pinpoints. I don't know if we can get the chart up for you. I think we should be able to. There you go. It's a wonderful Bloomberg, simple, elegant chart that really shows the kind of inflationary pressures we're seeing.
Yeah, absolutely, Francine. And that really has been the story this year, right? This run-up in inflation expectations and just real economy prices that we're seeing in grocery stores and the price of goods all throughout this year. And I think Althea is correct in pointing out that really what Omicron is doing to the bond markets is keeping those longer-term yields in check. But this is, you know, while we're still in a holding pattern waiting for the next catalyst on that front. Of course, we're going to get US CPI data this Friday. That's going to be very important because it's also serving as the run-up to the Fed meeting next week. And that's going to be the last Fed meeting this year. It's going to be their last chance to indicate what it is that they're going to be planning on doing in 2022 and whether markets should be pricing more than the 2 Fed rate hikes that they're currently pricing for 2022.
Great. Thank you both for joining us. Christina Aquino from Bloomberg, Althea Spinozzi from Saxo Bank, and she stays with us. In the meantime, we're also looking at live pictures of the German Bundestag. Olaf Scholz expected to be officially sworn in as the new chancellor. Just moments ago, I think we're also seeing Angela Merkel having entered the building. So we'll look at her legacy as well. Smart Conversations continue on Bloomberg Surveillance Early Edition. This hour, we discuss a luxury space with the Vice Chair of Salvatore Ferragamo, Michele Norsa, and the Chief Executive of the Saudi Stock Exchange. That's a conversation, of course, on the Middle East. Khalid al-Hussan joins us as well. Send in your questions on IB Plus TV Go. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, the new government of Olaf Scholz is due to be sworn in today in Germany's Bundestag. And we're looking live pictures of the Bundestag. That's after the coalition agreement was signed after being approved by each of the 3 parties. Where Bloomberg's Maria Tadeo joins us now from Berlin. Maria, a page-turner for German politics. What will be the immediate focus for the new government?
Yeah, Francine, it's a page-turner that we're seeing on live TV. We've seen that Angela Merkel, of course, coming in for what is her final day in this tribune, getting a standing ovation. The whole House was on their feet, except I would say, or I would note, for the AfD that decided not to do that. The MEPs are now being called to vote for Olaf Scholz, and we're expecting a definitive sworn in at about midday. Now, in terms of the priorities, we know that this is a government that is going straight into crisis mode. This is the pandemic that is now hitting really the country in full force, and Olaf Scholz has said that this is really what he wants to focus on heads on. Now, after that, it's all about the domestic agenda, which is centered on the economy, green, but also foreign relations. In fact, Francine, we're hearing that just as this is completed today, Olaf Scholz they'll go to Paris, meet Emmanuel Macron, and then we'll head over to Brussels and meet with Ursula von der Leyen, who, of course, will be an interesting meeting. Both of them are German. She's CDU, he's SPD, and the roles are now changing.
Yeah, they certainly are. The government coalition deal talks, of course, a lot of progress, both domestic and foreign policy. In what way is this going to be different from what we had under Angela Merkel, Maria?
Well, you know, there's 2 things where the focus will really be particularly, I would say, intense. One has to do with the domestic policy. As you know, Francine, and you've talked about this on your show many times, this idea that Angela Merkel did not really have a clear foreign policy. That Germany was after business deals. It was about the trade commercial relationship, particularly when it comes to China. That could change with the new coalition. And secondly, of course, it's about public spending and how much spending this country wants to do, particularly when it comes to modernizing the economy. And Francine, you know, just a few minutes ago, we were speaking to a very close advisor to Christian Lindner, who told me that today he was slightly disappointed with the media coverage of Christian Lindner, saying that he's being presented as too much of a hawk. He said that actually there's some nuance here, that he's been very clear that he does want to spend, but the private sector needs to provide some of that investment. When it comes to Brussels, he also said that he's looking forward to doing his first Eurogroup, and actually perhaps also called that, you know, you should look at him with an open mind. This is not the hawk that's being presented in the media. That was his message.
Okay, it's really interesting. I wonder how he feels about your group meetings if they last until 6 in the morning, as sometimes they do the next day. Maria Tadeo there in Berlin for us. Now let's get back on the markets and what this new government means for equities. Althea Spinozzi from Saxo Bank is still with us. Althea, is there anything in terms of policies that you like that actually makes it more attractive to buy, you know, German fixed income?
Not really, in the meaning that, as Maria just mentioned, the new government is very much focused on fiscal spending. They are talking about reintroducing the debt brake in 2023, but realistically, they also talk about increasing spending to modernize the economy, especially when under the green agenda and digitalization. So basically, Francine, that means more bond issuance. Therefore, it's safe to expect expect bond yields to rise above zero. We were expecting that already this year, but because of COVID distortion, they still remain well below zero. If they don't rise in the first quarter of next year, they will definitely rise above zero in the second quarter once that fears concerning COVID ease.
Althea, what are you expecting overall from the ECB, actually? You know, is the bar pretty high for Omicron to, I guess, decimate European economies in order to get some more stimulus from ECB?
Well, the problem with the ECB is that it's facing Omicron on one side, but on the other, it faces increasingly high inflation, and we are heading towards a very cold winter, and the natural gas crunch is basically adding to inflation upside risk. So it will be very weird to see the European central banks to engage in more accommodative monetary policies while inflation is so high. So we expect it to remain quite passive and to announce at next week's ECB meeting that the PEP program will end in March, and that will need to put upward pressures in European sovereign rates as well.
Althea, thank you so much. Althea Spinozzi there, Senior Fixed Income Strategist at Saxo Bank. Now, we're also looking at live pictures of the Bundestag, where it's a pretty important moment. Olaf Scholz just sworn in as Germany's 9th Chancellor. He is that since World War II, ending Angela Merkel's 16-year tenure, inheriting a worsening pandemic crisis, also inheriting a raft of geopolitical challenges, including the standoff over Ukraine. You can see a standing ovation for the new Chancellor of Germany. He is a 63-year-old social democrat. He was Merkel's vice chancellor for the past 4 years, and he really represents renewal at the top, but not too much, because voters who awarded him a narrow victory saw much of what they liked in Angela Merkel, which is a steady hand, a competent, if not charismatic, leadership. Of course, we'll have plenty more from Germany. Smart Conversations continue on Bloomberg Surveillance Early Edition. This hour, we discuss the luxury space with the vice chair of Salvatore Ferragamo, Michele Norsa, and the chief executive of the Saudi Stock Exchange, Khalid al-Hussan. Send in your questions on IB Plus TV Go. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, some workers here in the City of London are trying to reduce their risk of getting COVID ahead of the holiday season. Firms, including Invesco and PwC, have seen an increase in staff working from home recently. Now, they're taking advantage of the flexibility and work arrangements afforded during the pandemic. Well, joining us now is Tom Metcalf, who leads our UK bank coverage in London. Tom, I have like 1,000,001 questions. First of all, this flexibility, is it here to stay? Or are chief executives looking at this and saying, actually, I fancy everyone back in the office and I don't really like people, not coming back, even if it's because of Omicron?
Yeah, well, certainly the flexible work policies, they're not going anywhere. So a lot of the CEOs we spoke to, even if they were saying, we haven't yet seen this trend, we're expecting it, but we haven't yet seen it. They're saying this is exactly why we have a blended sort of work policy. I think in terms of this specific trend, I think it's very seasonal. So I think Christmas, you're going to see people pull back. And then come January, I suspect that, you'll increasingly see a return to the office, albeit a flexible return. So, people going in 3 days a week or 2 days or whatever kind of the office policy is.
Is this with a blessing of the chief executives, also because of Omicron, or is it the chief executives not being able to say no?
No, I think it's tacit blessing. So I think the difficulty is everyone's observing the Omicron. No one wants to kind of make the wrong call. So I think it's very much...
No one wants to catch it, for sure.
Yeah, exactly. No, exactly. So, yeah, and I think basically they're effectively saying, OK, it's kind of individual choice, and certainly no one's calling out people for not being in or anything like that. And the messaging has been increasingly conservative, so you can kind of almost subtly being encouraged to return home, basically, if you want to.
And is there a big difference, like we've seen the last 2 years, with some of the big, American investment banks and the rest?
Yeah, no, definitely. So Goldman's, JP Morgan, who've really led the return to the office, they are saying, hey, we haven't actually seen any drop-off in attendance. So it's not kind of universal across the City of London, but at firms where there has been that kind of move towards flexible working, it's definitely starting to pick up, and surely next week it will become a very noticeable trend.
Tom, thank you so much. Our Tom Metcalf, of course, who leads our coverage of UK banks with some great reporting. So congratulations also to the team. Now, we're also looking at live pictures of the German Bundestag, where Olaf Scholz has just been sworn in officially as a new chancellor. We saw a standing ovation. I think there's a large bouquet that suddenly showed up in the place where Olaf Scholz was sitting. This is Bloomberg. The Pfizer shot provides less immunity against Omicron in an early study, the first indication on the effectiveness of vaccines against the variant. A changing of the guard, Olaf Scholz becomes Germany's new chancellor. We're live in Berlin. And stay with Bloomberg Surveillance Early Edition. This hour, we discuss the luxury space with the Vice Chair of Salvatore Ferragamo, Michele Norsa. We also talk the Middle East and bourses with the Chief Executive of the Saudi Stock Exchange, Khalid al-Hussan. Send in your questions on IB Plus TV Go. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. So first thing is first, as always, let's check in on the markets. It seems that there's a clear trend of investors and markets in general wanting to buy the dip. So we're seeing another third time in a row where stocks are actually gaining. Some of the risks are maybe ebbing away, or certainly, there are concerns about vaccines are fading. So stocks are rising for a third day. Optimism about vaccines, eased concerns about Omicron variant. And then we also had Chinese policies, which are helping buffer against the fallout from mounting property debt distress. If you look at WTI, you can see crude oil amongst one of the biggest gainers yesterday in terms of asset classes, now at $71.65. So with the holiday season comes gift buying, and retailers around the world are working to meet demand amid inflation and supply chain disruption. The luxury fashion sector, which has been gaining momentum this year as it recovers from the pandemic, will be hoping to close out the quarter with strong sales growth. Well, we're joined now by Salvatore Ferragamo's vice chairman. He is Michele Norsa. Michele is also on a number of boards. Salvatore Ferragamo, of course, also being one of Europe's biggest luxury fashion companies, selling clothes and accessories in markets around the world. It was founded nearly 100 years ago in Florence. Michele, as always, thank you so much for coming on and talking about the luxury sector as a whole. Are things looking up? Is it easier despite the crackdown that we're seeing in China?
Yes, I would say now we have much better visibility on the global trends and the global markets. We have seen an incredible revenge shopping in the United States, similar or even bigger than what we saw in China in the first part of the year, in the first semester. And in China, we're probably looking at a temporary slowdown, which is mostly motivated by reduced mobility from region to region, COVID restrictions, and probably also a cyclical slowdown of the growth of the economy. But we believe in after the first quarter of next year, the trend will remain very positive.
Michele, talk to me about this revenge shopping. So is this pent-up demand that people suddenly splurge, or are they buying differently to what they would have bought 2 years ago?
I would say is very interesting because while on China it was very clear, it was in fact a repatriating consumption. So if you saw stores making a double or 3 times the volumes, it means that people were not traveling, and it means that they wanted to shop locally. If you shop locally, probably you buy even more. Now in the United States, it's been more surprising because at the beginning it was just Florida, California, Texas for different reasons. But then it started growing everywhere. We are seeing increases of more than 100%. And you consider Las Vegas, you take even Chicago, Detroit, and even New York, which has been pretty weak at the beginning of the year, is coming back. So it looks like a different way of spending, and people are traveling less internationally, so probably they have more money. Stock exchange is positive, there is liquidity. So it's there to stay, I believe.
And Michele, this is for luxury as a whole and Ferragamo.
Yes, I would say. And I think that geographically, all the brands are moving in a very similar way. Of course, categories are different because what you sell in United States is not probably what you sell in China. But I think an interesting trend is men's categories are growing faster than women's category. But this is due also because emerging market, Latin America, they are more focused on this product.
Michele, I mean, travel's coming back to a certain extent, although now Omicron is putting everything back in doubt. But I know you also think some of the hubs maybe have changed, so it's no longer Hong Kong or Singapore, but they've moved elsewhere.
This is quite incredible. I've been looking at the number of passengers, and the Hong Kong and Singapore has virtually disappeared. Singapore will not reach 10 million by now. Has not reached 10 million passengers, again 68 in 2019. Hong Kong, which is only international flight, I'm talking about international flight, is to a minimum, maybe down 85 or 90%. At the same time, the international traffic has found new hubs, so definitely Dubai is the most important hub at this specific moment and will be the #1 international airport. I see also Istanbul becoming important, connecting Asia to Europe, Africa to Europe. And I think the rest of international travel will come back in the second part of next year, 2022, and probably in 2023.
So, Michele, what does it mean in terms of, for example, companies' exposure to the Middle East compared to Asia? Is there going to be a pivot shift, or is it both regional hubs, but with the U.S. still at the top?
I believe the hubs in the Middle East are now important. They will become slightly bigger, but if you compare in terms of number of consumers and population, it will always remain Asia and the United States as a two key market. Where when we talk about China, we consider China as a whole, but now you have a Hong Kong, which is going not very well. You have Taiwan, which is not very brilliant. So in fact, you have an area in China, which is the eastern area and the southern area, which really are representing probably the biggest concentration of consumption, while some other regions are not as fast in growing. So I think the geography is changing, but the two big drivers will remain United States and China.
Michele, is there a point where actually you can't increase prices, or luxury companies in general can't, increase prices? Because I've been reading, certain companies have putting prices up some 20, 30%. Is there a limit where it starts denting demand, or does luxury operate on its own?
I think this is quite interesting. It's one of the reasons why the luxury industry is probably have been re-evaluated even more now, because the price resistance is very limited. First of all, you have no benchmark because people cannot travel. And if you buy locally, at the end of the day, probably you have more time, you have more attitude to buy, cross-selling is easier. So you see not only a price increase, but also a ticket increase. But price-wise, all the brands are reflecting on their prices, of course, the cost of energy, the cost of shipping, but even more. I don't see a resistance, and I even am surprised when I look to the hyper luxury, and we're talking about cars over 2 million, we're talking about jewels, we're talking about yachts. These product categories have been flying during the pandemic. So I think that probably also what the brands built in terms of image, quality, sustainability, are really reflected in the price, and people are ready to buy quality
Michele,
made in Italy.
Michele,
Yes.
when you talk about yachts, private jets, hypercars flying, is this because they're not spending elsewhere, or is this boredom in the pandemic? Like, what's the reasoning behind it, and is this trend here to continue?
I think is making pleasure to himself, to themselves. I think at the consumer at this level, they want to please themselves. I think all the consumers after the COVID really have been trying to do something special or to buy something special, both personal, luxury, or as we talk, high quality life perspective. When you fly private, in fact, you can enjoy different experiences. So I think it is really the desire to please yourself, and there is also a number of rich people around the world, which is always increasing.
Michele, talk to me a little bit about leisure wear and the fact that not many people are wearing ball gowns because every Christmas party is being cancelled at the moment, and certainly when people go to the office, they're dressed down more than they were in 2019. Can you see that in the numbers? Can you see in terms of offerings that staying this way, the trend taking hold?
Absolutely, I can see it. I'm also sitting on the board of Zegna, and I see the enormous change of the product offer and the market request. And I think at post-COVID, people did not go back to the previous, let's say, formal image, but they could not even stay in pajamas and jumpsuits. And so they have moved to a luxury. It happened to have a conference with investors.
I'm not going to ask if you're wearing pajamas. I know, Michele, I'm not going to ask, but a lot of people.
A lot of people. So people now, they go to leisure wear, but I think it's a kind of leisure wear. It's natural fabrics, it's natural materials, it's cashmere, it's soft, it's warm, it's flexible, even in terms of shoes. And I think, again, people feel more free than being in a stiff suit as I am wearing now today.
Yeah, Michele, what does that mean for margins? Is it more difficult if you have athleisure, the kind of work cooler? Is it more difficult to hike up the prices, or are the margins smaller than the tailored suit, or is it vice versa?
No, I would say is vice versa. Probably where you have to build is the value, because of course building the value of a suit, you may need 2 cashmere sweaters or 3 cashmere sweaters, so you have to build probably a larger wardrobe. But again, you have more colors, you have more opportunities, you have more changes, and in fact your wardrobe will look quite different when you look at this striped suit, double-breasted, single-breasted that you're never going to use again. It's really something new. It's a major change in habit and costume.
And Michele, this is across the world, right? Are tastes changing the same in Asia than they are in the US in terms of the work from home leisure wear? I don't know whether we call it leisure wear. Do we need to find a new name for the kind of products that you'll be selling?
I don't know. I'm not good at names. Every brand, every company is really renaming or redefining this product category. It's casual wear. It's like, once you add luxury, it can be casual wear, leisure wear. I think is a combination. But I think give also more flexibility, more fantasy to the consumer. And so you feel more the desire of buying frequently than when you repeat the same consumption as it was before, from a blue suit to a gray suit to striped. So it is an opportunity. And I think Asia has never been, apart from Japan and somehow Korea, has not been very, very interested in formal wear.
Michele, as always, thank you so much for making us smarter on some of the insights that you have in luxury. Michele Norsa, their Vice Executive Chair at Salvatore Ferragamo. Now, coming up, we'll have plenty more, of course, on luxury. We'll have plenty more on sectors. We'll also talk about what we're seeing on some of the treasuries and look at Nestle. This is Bloomberg. This is Bloomberg Surveillance Early Edition. We'll have plenty more, of course, on the markets throughout the day. So let's quickly do a market check to see exactly what we're facing. This is a picture overall for the markets. Now, there is definitely some of the dip buying that we're looking at right now. And when you look at some of the stocks rising, the third day in a row as optimism about vaccine eased concerns about the Omicron variant. Now, let's get straight to your Bloomberg Business Flash. Here's Max Ramsey. Hi, Max.
Hi, Francine. S&P says it continues to believe that a default by Evergrande looks inevitable. The ratings agency says the Chinese developer's liquidity remains extremely weak. That's after a month-long grace period expired for some bondholders to receive overdue coupon payments. Nestle is selling part of its stake in L'Oreal back to the cosmetics maker for $10 billion. The two companies have been in a partnership since 1974, a protective move at the time to shield L'Oreal from possible French nationalization. Following the sale, Nestle will own 20% of L'Oreal, down from 23% at the end of last year. The CEO of oil major ConocoPhillips says there's no fast way to return supply. In an exclusive interview, he told Bloomberg the industry needs a stable, transparent system to invest. ConocoPhillips also announced a $1 billion variable dividend as part of efforts to return more cash to investors.
So our commitment's to return 30%. So we introduced a third channel, which is a variable return of cash channel, and announced that we would be giving $1 billion additional on top of what we do already as a company. So the total return to shareholders next year is $7 billion, which represents about a 16% increase and a recognition of the commodity price market we find ourselves in today.
And Russia's second richest man is joining Jeff Bezos and Bill Gates in facing one of the world's biggest divorce claims. Vladimir Putin's ex-wife, Natalia Potanina, is seeking 50% of the value of his stake in MMC Norilsk Nickel in a court hearing in London today. Given that Potanin owns around 1/3 of shares in the metal producer, that could amount to more than $7 billion. And that's your Bloomberg Business Flash. Francine.
Thank you so much. Prenups. I don't know if they hold, actually. We'll have a conversation about maybe another time. Our Max Ramsey there with the very latest Business Flash. Coming up, Nestle selling part of its stake in L'Oreal back to its cosmetics maker for $10 billion. So we'll have the latest on why this is happening now. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, Nestle is selling part of its stake in L'Oreal back to the cosmetics maker for $10 billion. The move trims a link between two of Europe's consumer goods giants, which goes back to the 1970s. The sale will reduce Nestle's stake to 20% and has provoked speculation over an amicable divorce. Well, joining us now live from Paris is Caroline Conant. So, Caroline, could you start by telling us about the sale? Why now? And how much does it actually mean to either company?
So it's quite significant because historically, as you just mentioned, since 1974, Nestle and L'Oreal had been linked together. They had this partnership because at the time, Liliane Bettencourt, the wealthy owner of L'Oreal, was attempting to fend off an attempt to nationalize L'Oreal. So that's why she was looking for a partner. She found this partner in Nestle. So Nestle actually remains a significant shareholder even after selling this 8.9 billion euros stake, because they will still have 20.1% of L'Oreal. They will keep 2 seats on the board. Now the question is, as you mentioned, is whether this means the start of a total exit of L'Oreal. What will follow? What will Nestle do with the proceeds of the sale? And this could also have an impact on Sanofi, because L'Oreal also owns 9% of Sanofi. And L'Oreal executives, every time I was asking them about this stake, were saying this all depends what Nestle does with their L'Oreal stake.
So, Caroline, how does this all fit into Nestle's wider transformation plans?
So clearly Mark Schneider, the CEO of Nestlé, has been attempting to focus on most profitable parts of the business, such as pet care, such as coffee. You know, they have Nespresso. They had also this partnership with Starbucks, so they started selling Nespresso capsules from Starbucks in supermarkets. And Mark Schneider really is trying to refocus the business. So we'll see what he does with the proceeds of this 8.9 billion euros. But a couple of months ago, when you had the latest update on Nestlé sales, they actually increased their forecast. They're betting on the best year for this year in a decade, with a 6.9% growth at Nestlé for this year, and L'Oréal as well. But this was also, of course, before we had the Omicron variant and possible impact on both Nestlé and L'Oréal.
Okay, Caroline, thank you so much. Caroline Kunal there with the very latest on this deal. Now let's get straight to the Bloomberg First Word News. Here's Max Ramsey. Hi, Max.
Good morning, Francine. President Biden has warned Russia's Vladimir Putin that the US and its allies would take strong economic measures to respond to any attack on Ukraine. Bloomberg understands those could include a push to stop the contested Nord Stream 2 gas pipeline. After the 2-hour video call, the Kremlin said it won't tolerate NATO expanding eastward or deploying weapons in Ukraine. The first reported experiments on the effectiveness of Pfizer's COVID vaccine against the Omicron variant have found it provides some protection. South African researchers say Omicron has the ability to evade the shot and is robust but not complete. It says boosters would likely reduce the chances of infection and severe disease. Jeffrey Gundlach is warning of rough waters ahead for financial markets, with the Fed poised to tighten policy. During a webcast, the billionaire money manager advised keeping an eye on the high-yield bond market, which he called a potential canary in the coal mine for risk assets. He says with elevated debt levels after the pandemic, trouble could emerge when short-term rates surpass 1%. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Max Ramsey. This is Bloomberg. Francine.
Max, thank you so much. Our Max Ramsey there with some of your top stories. Now, the other story we're following, and of course this ties into some of the concerns that Europe has, is Olaf Scholz, elected by the parliament to become the German chancellor. We're looking at live pictures throughout the day. It was pretty sobering in terms of the ceremony. We had Angela Merkel. There was a standing ovation for him. I don't know if we still have the pictures, but certainly we've been covering them all day. And tied to that is one of his biggest concerns, which is how to deal with Ukraine and how to deal with the energy price. So moments ago on the Bloomberg terminal, German power, the amount of money it costs actually to buy it, German power for next year has risen to a record. That means he'll have very tough questions to answer about whether they'll subsidize, of course, some of the companies that need to pay for this higher price, whether they subsidize some of the poor households, and of course what it means with Russia and gas passing through Europe. Stocks rising for a third day on optimism about vaccines. Bloomberg Surveillance Early Edition continues in the next hour.
The Omicron variant really creates uncertainty, but it doesn't really change the story. And as a result, we think that momentum will carry on.
We're simply getting back to pre-pandemic levels of activity. We tend to romanticize where the economy was prior to COVID-19, but we were already losing momentum.
The notion that the market has been so resilient throughout the year in the face of all the risks that are very well known simply suggests that you're not even peeling the first layer of the onion back.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kailey Leinz.
It is 10 a.m. in London, 5 a.m. in New York, and 6 p.m. in Hong Kong on this Wednesday, December the 8th. Our top stories today. Optimistic on Omicron, U.S. futures gain, but European stocks pause as investors weigh the latest research on vaccines versus the variant. Changing of the guard in Germany. Olaf Scholz is taking over as Chancellor, ending the Merkel era. And averting a US government shutdown, the House passes legislation that will pave the way for an increase in the debt ceiling. Welcome to Bloomberg Surveillance Early Edition. It's just gone 10 o'clock here in London. Kailey is with us in New York, of course. Good morning to you, bright and early, Kailey. So we've seen 2 days of buying the dip, a third day perhaps today of buying that dip. Certainly we started that way in Europe, but just paring back on those early gains a little as we try to digest the latest intel we're given on vaccines and variants.
Yeah, the gains in Europe today not quite as robust, but you did see that risk on feel evident once again in Asia overnight. The MSCI Asia Pacific Index rising for a second day, up the better part of 1%. Now, of course, there were some notable exceptions to the broad gains in the equity benchmarks today, and that includes basically any stock that is tied to PFIZER Group. Of course, PFIZER Group is a real estate developer in China. A lot of concern about its ability to pay off debt. This is one of those heavily indebted developers that we're keeping an eye on. Its shares were halted in Hong Kong trading, but its affiliates like PFIZER Capital Investment Holdings were under immense pressure. That stock down the better part of 9% in the Asian session overnight. Now, of course, while we're concerned about PFIZER, while we're concerned, of course, always about Evergrande, there seems more broadly, though, to be confidence in China stepping in to shore up the property sector, limit the fallout from those indebted developers. And, of course, we saw that evident in the RRR cut just days ago. And that is once again giving a boost to Asian dollar bonds. You saw spreads coming in by about 3 basis points today. And then one final thing to note, also a Chinese asset, the Chinese yuan at its strongest against the U.S. dollar, going all the way back to 2018, right now trading at 634.62. As for the picture here in the U.S., of course, we are coming off a monster day of gains, the best day for the S&P 500 and the NASDAQ 100 going all the way back to March. You're seeing those gains continuing this morning, although they aren't quite as robust. Right now, up just 0.2% on S&P 500 futures. In the bond market, we also saw yields moving higher yesterday. That's reversing a touch today. We come in 2 basis points on the 10-year yield to 145. And yesterday, the 2-year yield hit its highest since March of 2020, around 69 basis points. We retreat, though, this morning just south of 68 basis points at this point. And then crude is coming off of its best 2 days since all the way back in November of last year. So we're talking more than a year. It was lower earlier in the session, though those gains coming once again, Matt, we're up about 0.4% on WTI, trading at 72.31 a barrel.
Yeah, we had a monster rally here yesterday as well. In fact, it was the biggest day of gains for European stocks since what's being called PFIZER Monday in November of 2020. It was so big that my tie lit up. You can see it's dimmed down a little bit today. We're not seeing those gains, and in fact, we're seeing indexes turn lower now. The DAX is down. The CAC 40 is down. The IBEX is down. So we're losing the momentum that we kicked off the trading day with. We are still seeing some strength in certain assets. For example, the euro is gaining a little bit against the dollar today, although the pound isn't doing so much. We're seeing 10-year German bunds come down. Investors are buying those. That's not such a great sign, right? Looking for a little bit of safety in the bunds. Brent crude is up as well, but we're not seeing the kind of major rally that we saw in Brent today. We didn't see it in NYMEX, as Kailey just showed you, either. And Bitcoin is also off, increasingly linked, as we say now almost every day, to risk assets. Bitcoin is a really good indicator of the market's feelings, and today it's not feeling so hot, down to 50,000 and change. So, Anna, it looks like everything that we started off with this morning is faded. All the momentum that we had yesterday has dissipated.
Yeah, we have seen 2 strong days of buying those risk assets, as you point out, Matt. But yes, fading a little bit as we go through the European session. Let's look ahead, though. Let's think about what is coming up today. It is the first day for Olaf Scholz as Germany's new Chancellor. We'll get an update on this shortly, ending Angela Merkel's 16-year tenure, a real turning of the page there in Germany. At 10:30 a.m. New York time, the EIA will release its crude oil inventory report. A lot of concern has been around demand and Omicron recently. Back to the supply story today. And Bloomberg hosts the Sustainable Business Summit, focus on finance. The virtual conference includes CEOs of Honeywell and Dominion Energy. So plenty to think about in the day ahead. Let's focus on what we know so far about Omicron then, because we have had some further news on this. Early studies on Omicron are perhaps cautiously optimistic. Vaccines may be less powerful against the new coronavirus variant, but protection can be fortified with booster shots. Studies from South Africa show that Omicron does cause a loss of immune protection, but not a complete one. And Kailey, reading and rereading and rereading the results of this study this morning, I mean, it's possible possible to spin this in either direction, frankly. Either you can say there is partial protection against Omicron, and you can take comfort from the idea that a booster is going to improve your chances, or you can look at the bare facts and look at the 40-fold drop in neutralizing antibodies versus the original strain and become a little preoccupied on the downside by that. It does seem as if the market is taking its time to work out what it thinks about this.
Yeah, I mean, a lot of that language was really quite vague, and we're still looking for more clarity that hopefully will come over the coming days and weeks. But the market did not wait for that clarity yesterday. Of course, it was a monster rally for stocks, the S&P 500 having its strongest daily performance since March. Tech shares are the ones that really led the rally, with the NASDAQ outperforming for the first time in a week. And in the sea of green, Apple was the real standout. Bloomberg's Laura Wright has the details. Laura, why?
Apple continues to show momentum in the pre-market, Kailey, and that's off the back of a monster tech rally, as you mentioned, that we saw yesterday. The Nasdaq 100 up over 3%. Apple's share price closing at $171 a share. Now, adding fuel to that fire was Morgan Stanley, increasing their price target to Apple $200, matching the previous street high set by Wedbush. Now, Morgan Stanley, they see further upside for Apple from virtual reality, that pivot toward a metaverse and autonomous vehicles. Now, over the last 2 years, Apple has outperformed its peers. Strong balance sheet, a lot of cash, and it's why investors continue to buy in.
All right, so I'm going to have to ban the word monster. We can't use it. We've already used our quotient of the word monster for the day. We did see big price gains, but it wasn't just that caught our attention. We saw that supported by strong volumes as well, Laura, in the options market. What contract stood out for you?
Yeah, so call options outstanding for Apple are rising, you can see here. And yesterday, the most traded options were Apple weeklies expiring this week with a strike price of $170. Now, if Apple is to become the first company to reach a $3 trillion valuation, the magic share price number it needs to reach is just north of $182. So still some way to go.
All right, Laura, thanks very much. Laura right there talking to us about the big rally we saw yesterday and the support it had in options volume. Now, I'm excited here in Berlin. A new government is being sworn in. Olaf Scholz will be the new chancellor. This happens, of course, at the Reichstag. That's after the coalition agreement was signed. It was approved by each of the three parties that are in the coalition, the so-called traffic light coalition. Christian Lindner from the FDP will be sworn in as the new German finance minister. Alexander Graf von Lambsdorff, FDP Bundestag member, spoke with Bloomberg earlier on what he expects from Lindner.
He's not a hawk, but what he wants to see are balanced budgets once we can afford to do that after the COVID pandemic. And at the same time, we are very clear that we will respect the debt brake here in Germany, and we will not enter into excessive spending. So these are things that clearly are linked to Mr. Lindner.
Bloomberg's Maria Tadeo joins us now. I believe she's at the Bundestag, at the Reichstag. Maria, a page-turner for German politics. What's going to be the new focus, the immediate focus, I should say, of the new government?
It is a page turner, and in fact, we're waiting now for Olaf Scholz to come back into this building and be officially sworn in. Now, the votes are in. He's now gotten his certificate. It wouldn't be Germany without the piece of paper certifying the vote, and we're now really just expecting this final bit of the ceremony before he's officially chancellor. And, you know, Matt, this is what we know. He's going straight into crisis mode. A lot of this has to do with the pandemic, and he's been very clear. It really is about going heads on against this wave that is really hitting the country hard this time around. Then after that, of course, we're expecting him to, in fact, go to Paris, go see Emmanuel Macron. So that gives you an indication of where the foreign policy when it comes to the EU is at. And then he'll go to Brussels to see Ursula von der Leyen, the head of the European Commission. So he's putting a priority first on the French, then he'll go to Brussels.
Maria, how much are we going to be talking here about continuity, and how are we going to be talking about real change on the domestic or on the foreign policy agenda?
Well, you know, Anna, those are the two big topics. One, of course, is that we know when it comes to the foreign policy, the perennial criticism of Angela Merkel and the CDU is that Germany did not have a foreign policy, that Angela Merkel pursued trade deals, that this was all about business for Germany. And that's why the country now is in a tricky situation with China, and it's in a tricky situation with Russia. Now, in terms of what we do from here, if the early indications point to anything, is that perhaps we're not going to see any big meaningful change on the short term. Olaf Scholz yesterday surprised many, saying our foreign policy is one of continuity. Where it gets interesting, however, is on the domestic front. We know that there has been big promises to modernize the economy, to go greener, to go leaner. That's going to require a lot of money. And I was just speaking to a very close advisor to Christian Lindner, who will be finance minister, and he told me, I'm disappointed by the way that he's being portrayed in the media. We're not talking about a hawk. We're talking about someone who says the money has to be well spent, and it also needs to include investment from the private sector. There is some nuance to Christian Lindner. We'll have to see whether or not, of course, that translates in Germany, but also in Brussels at the Eurogroup.
Right, that advisor is the Graf, Alexander von Lambsdorff. Maria Tadeo, thanks very much from the Reichstag. Now, it may take months to figure out if Joe Biden and Vladimir Putin managed to defuse the crisis over Ukraine. The two leaders held a video call yesterday that lasted about 2 hours. President Biden's message was that a Russian invasion of Ukraine would lead to sanctions. Putin made it clear he won't tolerate the West deploying weapons in Ukraine. So a lot to talk about there. Emily Wilkins, Bloomberg government reporter, joins us from Washington, D.C. What did we learn, Emily?
So at this point, there is still a lot of uncertainty around exactly what Putin is thinking, what's going to happen with the Ukrainian border. The goal for President Biden here was to really come off strong, show the U.S. power, really sort of lay down what would happen should Putin try to invade Ukraine. But I think, Matt, you really just hit the nail on the head there. We're not going to know what the outcome of this call was still for several more months. And it's interesting to think of this in the wider context of the Biden administration. He really came into office making no secret that his focus, he wanted that to be on China, for that to be on Beijing. But because of recent moves by Putin, because of the amassed troops at the Ukrainian border, Biden has had to now shift his focus to what's happening in this area of the world, while there are still ongoing tensions with China.
So maybe not tangible progress on the foreign policy front, but there was some tangible progress in Congress yesterday, Emily, with the debt ceiling. What kind of fancy footwork is that going to require in the Senate?
So the big concern for Democrats with how they were going to raise the debt limit on their own is that it would have been a really long process. Republicans could have dragged it out, and Republicans could have also offered a lot of amendments that Democrats wanted to avoid voting on because it could have split their party. So yesterday we saw an agreement come to by the Republican leader in the Senate, Mitch McConnell, and the Democratic leader, Chuck Schumer, that would basically allow Democrats only to pass a new debt limit, but it would do so in an expedited fashion. So some of those concerns Democrats have no longer on the table. It would still be a Democrat-only vote. Republicans made that very clear. And Democrats would be moving the new debt limit up to an amount that could sustain throughout 2022, going past the midterms. The Senate still needs to take the vote on the process. The House took the process vote last night. And of course, once the process is out of the way, they still need to take the actual vote on the debt limit. But at this time, lawmakers are saying that it's likely they will get that done before that December 15th deadline laid out by Treasury Secretary Janet Yellen.
Exactly 1 week from today. Thank you so much to Emily Wilkins of Bloomberg Government in Washington. And now let's get back to the markets and take a look at some stocks moving in pre-market trading here in the U.S. A big one to the upside is EPAM Systems, or maybe it's EPAM Systems. This isn't really a company that we talk about all too much. It's an IT company, but we are talking about it this morning because it is getting added to the S&P 500 next week, replacing Kansas City Southern on December 14th. As a result, that stock up about 9% in early hours. Plunging to the downside, though, is Stitch Fix. Of course, this is the subscription company, sends you personalized clothing and fashion choices in the mail. It gave a forecast for revenue that was below the lowest analyst estimate. A number of analyst downgrades off the back of that, and that stock down hard in early hours by about 24%. And one other stock moving to the downside is one we've already talked about today, Pfizer. It is really unclear how you should read the data coming out of that research in South Africa. Is it a vaccine that still works against the Omicron variant, just to a lesser extent, or should we be focused on how robustly, I believe is the word that they use, that efficacy came down? It seems that right now traders are faring on the side of pessimism because that stock is down about 3% before the bell, Anna.
Yeah, certainly a lot of people reading and rereading that story, and certainly very well read on the Bloomberg terminal this morning. Now, coming up on this program, markets rising, US futures are rising at least, and some European markets as Omicron concerns have been easing of late. Certainly, we've seen that over the last couple of days. More with Laurie Heinel, Global CIO at State Street Global Advisors. That conversation ahead. And how does psychology shape COVID policy? We will speak to UCL psychosocial studies professor Anne Phoenix, part of the team that advises government here in the UK. Plus, rate hikes on the horizon. We'll hear the outlook from Brian Moynihan of Bank of America. This is Bloomberg.
Welcome back to Bloomberg Surveillance. This is the early edition. I'm Matt Miller in Berlin with Kailey Leinz in New York and Anna Edwards in London. Now, I've got a chart here that I'm going to walk our radio listeners through. I'm going to describe it thusly. It's two-year yields. We've seen a monster rally in two-year yields over the last couple of months here, and this shows that the Omicron variant hasn't derailed expectations in the market for Jerome Powell and his Federal Reserve to tighten. Christine Aquino, who leads our markets coverage for Bloomberg, joins us now out of London to talk about this. The yields continue to rise in the two-year, even with the Omicron variant out. So it looks like the market is less concerned about the virus and more focused on the Fed.
Absolutely, Matt. I think, really what Omicron did was to slow the pace of these expectations, but completely not taken off the table for sure, because we're still seeing at least 2 Federal Reserve rate hikes priced in for 2022, and we're waiting on markets to actually price in a third one. I think we're getting pretty close there. But that just really shows that markets are still very much on the train of Fed normalization, Fed raising rates in 2022. They're still big believers in that for sure.
Christine, good morning. So US futures pointing higher this morning. European equity markets, though, pausing a little bit for thought on this Omicron latest information. Do you get the sense that the buy the dip is a little too optimistic to carry on with that as we go through this week, or do you not think the gains look overdone?
I think, Anna, that what we're seeing now is a bit of consolidation after those gains, right? I would note that for European stocks in particular, they're just coming off the back of the biggest one-day gain since PFIZER Monday in November 2020, And for such a big gain like that, it is normal to see a little bit of consolidation here. We do also get the sense from investors in the market at the moment that, okay, so Omicron has done its thing in terms of weaving its way through the market reaction functions. Now people are waiting for the next big catalysts. We could see that as soon as Friday with the US CPI data, because that's, of course, the precursor to the last Fed meeting this year.
Yeah, and it'll be interesting to see what the reaction to that data is in the bond market. But Christine, it seems that the correlation between tech and yields has kind of broken down, in that when yields move up, you don't necessarily see tech moving lower.
Yeah, absolutely, Kailey. I mean, I think that was some of the expectations of prominent market strategists this year, right? This idea of higher treasury yields really doing a number in the tech space. I think that could be a function of a number of different things, probably some indication from central banks, including the Fed, that even if they're going to tighten, it will be at a gradual pace at the moment, probably less than what markets are currently pricing in. And of course, we also get indications of support from the world's second largest economy, which is China. And they're, of course, pivoting toward easing. And so it's kind of an interesting dynamic and tension there, where you have the world's biggest central bank moving towards normalization and tightening, but the world's second largest central bank still very much on the easing pivot here.
Yeah, a different path then. Interesting complexity and opportunity provided there. Christine, thanks very much. Bloomberg's Christine Aquino joining us there from the Markets Live team, of course. And if you want up-to-date market analysis, check out MLIV Go on your Bloomberg terminal. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in Berlin with Anna Edwards in London and Kailey Leinz in New York. Let's get now to the first word news. The U.S. has overtaken the European Union as the largest buyer of British financial services. Last year, exports to the U.S. rose to more than 34% of the total, while exports to the EU fell to 30%. The UK's financial industry continued to maintain the world's largest trade surplus. Meanwhile, an outage at Amazon's cloud computing unit left thousands of Americans without working refrigerators, Roombas, and doorbells. The disruption also upended package deliveries and took down major streaming services. Amazon said it was able to resolve the problem after about 9 hours. Coming up, Lori Heinel, Global CIO at State Street Global Advisors, talks to us about yesterday's monster rally and how we should be positioned today. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller in Berlin and Kailey Leinz in New York. Well, European equity markets then, Matt, flat right now, erasing their gains we saw earlier on in the session. Markets pausing for thought, trying to work out what to make of the latest data around Omicron. And then maybe later on in the week, Mark Cudmore told me earlier at least, focusing on the Fed and looking ahead to next week because there are so many central bank meetings coming up.
Yeah, there's a lot coming up. And I was just thinking of, you know, my first job here at Bloomberg, I was a stocks reporter, and I would write about the markets rising or falling. And some days I didn't know why we were losing ground. And my editor at the time said, just say investors are taking profits. So we can say that today. Investors are taking profits because we did have a really great day yesterday, didn't we?
Well, we certainly had 2 days of gains, which look pretty strong. Is that set to continue? I see U.S. futures point to the upside. Another strong day, perhaps, for tech stocks then, Kailey.
Maybe. The jury's still out on that one, given we still have about 4 hours to go until the opening bell here in the U.S. But to Matt's point, it's really hard sometimes to assign a narrative to the price action we're seeing because, yeah, we saw those big gains from yesterday and nothing really had fundamentally changed. We're still faced with a Fed that may be tightening more quickly. There's still uncertainty around the Omicron variant, but maybe it was just taking the opportunity to buy the dip, and maybe we'll see some profit taking coming after that. As you mentioned, the Stock 600 has given up its gains and is now just fractionally lower down by less than 0.1%. And here in the U.S., futures are still in positive territory. S&P 500 futures up about 0.2, but you are seeing once again that outperformance from technology. NASDAQ 100 futures are up a little bit more than that. In the bond market, yields are moving lower after 2 days of pretty solid upside moves. We're down about 2.5 basis points on the 10-year to just south of 145, and the dollar also weaker broadly in the G10 space today. The Bloomberg Dollar Index down by a little less than 1%. Now, of course, as we were saying, uncertainty around the Omicron variant still very much at the forefront. We got that news out of a South African study that said that the Pfizer-BioNTech vaccine did have reduced efficacy against the variant, though there was still some protection. So read that as you will, but investors are reading that as a negative, at least for those stocks. BioNTech and Pfizer down 4% and 2.5% respectively, and some other vaccine makers taking it on the chin today as well. Moderna is down 4%, and Novavax, which is waiting EU sign-off for its vaccine candidate, is lower by the better part of 6%, Matt.
All right, I am looking at what was my first favorite function on the terminal today. And our radio listeners who can't see this, I'll just tell you, when you get to the office, sit down in front of your Bloomberg terminal and type FCON Go, FCON Go. It's financial conditions. You can look at it for a number of different countries. This is for the U.S. And the reason I'm looking at this is that a viewer asked me yesterday, how much can rates rise before it starts to really affect the economy? How much can they rise until financial conditions are tighter? Now, financial conditions have tightened recently after the hawkish pivot by Jerome Powell, but they're still loose. They're still above that zero line. Joining us now is Lori Heinel, Global CIO at State Street Global Advisors. And Lori, this must be something that you think about as well, because even if we see 1 or 2 or 3 hikes from the Fed next year, we're still less than 1% on the Fed funds target rate. So we still are looking at fairly loose monetary conditions, right?
We absolutely are. And I think that's been really part of the battle here is that investors are fearing the Fed and the opportunity for the Fed to make a misstep here. But at the same time, as you note, rates are incredibly low, and even a couple of tightenings won't even get us back to, real interest rates being positive. So we think that financial conditions will remain quite accommodative for a long period of time.
Laurie, good morning. It's interesting. We're getting some headlines across the Bloomberg right now, citing the FT talking about the possibility of further restrictions in the UK surrounding the Omicron variant. We'll wait for that to develop, see what the government announced. But interesting to throw that into the mix because I want to understand how much we need to worry about Omicron and central bank tightening at the same time. I've had lots of different responses to this. Some people say if Omicron turns out to be a really severe threat, then central banks are going to dial back their tightening, whatever path of tightening they're focused on. Other people say, but if this does lead to further inflation, then they're going to stick with their tightening regardless. What are your thoughts on whether we need to worry about those two things at the same time?
Well, look, the interplay between how this virus continues to evolve and what it means for central bank and fiscal policy is really something that's very intertwined. And as you note, when we have news that suggests that perhaps Omicron is not going to be as devastating, perhaps it's more infectious, but it's not going to lead to as many hospitalizations or deaths, then all of a sudden the market breathes a bit of a sigh of relief. And then on the other side, when you have a testimony from Powell, for example, where he notes that the Fed may be a little behind the curve on inflation and the markets get a little bit spooked that perhaps the Fed will overdo it, then we have a bit of a sell-off. So there's a very delicate balancing act. I mean, our view is that it's too early to tell for sure about Omicron, but we think it's unlikely that we're going to see the kind of draconian lockdowns that we had in 2020. And that possibly sets us up for a pretty good 2022. And so long as central bankers don't move super hawkishly, we think that's going to be okay.
Okay, and thinking about inflation and how high it gets then, Laurie, what is your expectation for where this peaks? Jeffrey Gundlach of Double Line Capital talking about how he thinks it'll get to 7%. I think the estimate is for 6.8% in the very near term. He also says, though, it lingers around 4% or above all the way through next year. Is that your expectation?
Well, we don't think inflation is going to be quite that nefarious. We actually think that we're going to start to see a bit of a turn come into the early part of next year. Now, what's likely to happen is you'll see the drivers of inflation change a bit. So things like housing will continue to be a driver of inflation into the second half of 2022. But the comps on other things like commodities and other inputs to production will actually modulate. So we think inflation is likely to remain a bit elevated, but we're not looking at those kind of eye-popping numbers at all.
And there's probably a question, Laurie, of whether south of 145 on the 10-year reflects the kind of inflation we are seeing right now in this moment. Do you expect yields to stay in this lower range? And does that mean TINA will still be intact in 2022?
Well, we expect long yields to go up a little bit, but it's really more on the back of the growth story than it is about inflation. So we actually expect the yield curve to flatten pretty severely as we head into 2022. But there are sort of limits to where we think long rates can go, at least in the near term. One of those limits is going to be crossover buying. Rates in the U.S., for example, remain pretty attractive. You also don't have, we think, long-term structural growth that's going to eclipse the 2.5% levels. So while we'll have a bit of a cyclical growth story and a bit of inflation, we don't think that that's going to lead to yields to back up much over, high single digits, high ones into maybe 2%.
Laurie, just because you said the word cyclical, the call for 2021 was cyclicals over defensives, value over growth, Europe over the U.S. How do you see that kind of divergence playing out in 2022?
Yeah, we actually want to jump onto that theme. One of the things that we've been talking about is it's less about the directional trade in 2022, although we do think equity markets will still continue to climb higher, but it's much more about being opportunistic around, where there's value in the chain. And as you note, if we do see this extended recovery, which we do expect in 2022, then that sets a pretty good backdrop for cyclicals to do well, for European stocks to do well, places where there have been pockets of valuation where investors have been sort of less willing to take those risks. We think those will be places that benefit in 2022.
Laurie, just want to ask you about a debate that seems kind of cyclical. Yesterday on Bloomberg Radio, we had the opportunity to interview Peter Lynch, obviously a giant among active fund managers, and he said investors are missing out right now if they go all in on index funding. Now, I've also spoken to previously I've interviewed Jack Bogle a number of times, and over the years I've seen this argument change, but maybe there's a different answer. Active versus index or passive, what do you think?
Well, we actually think it's both. And as obviously one of the largest index managers, we've got a bit of a dog in this hunt, if you will. But we actually do have active capabilities as well. And what we're finding from our active teams is that they're seeing really interesting relative valuation opportunities in this environment, particularly in markets like emerging markets, where from a directional perspective, we're not necessarily very bullish there. Still really good stock picking that can go on. And as we just talked about, as we see this rotation potentially from growth to value, historically value-oriented managers have been able to identify good opportunities on a relative basis. So it's not an either or, it's trying to find that balance between getting access to markets and potentially adding incremental alpha.
Laurie, thanks very much. Thanks for joining us. Laurie Heinel, Global CIO at State Street Global Advisors. Thanks for being with us on Surveillance Early Edition. Coming up on this program, we'll be speaking with Khalid al-Hussan, CEO of the Saudi Stock Exchange, as it makes its trading debut. Stay with us for that conversation. He joins us shortly. Plus, also coming up, how psychology can help shape COVID policy. We'll speak with UCL Professor of Psychosocial Studies, Anne Phoenix. That's next. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. You're looking live at the principal room. Coming up later today, former New York Fed President Bill Dudley. That's at 7:30 a.m. in New York, 12:30 p.m. in London. This is Bloomberg.
They will operate Monday to Friday, and Friday will be a full business day for the stock markets.
That was the Director General for the UAE government's Human Resources Authority announcing a big shift in how the country's stock exchange operates. The UAE is breaking rank with the rest of the Gulf region by changing its work week to Monday to Friday in order to draw overseas investment. So could the rest of the region follow suit? To help us answer that is Bloomberg's Manus Cranney in Dubai, and he is joined by the CEO of the Saudi Stock Exchange, which made its public trading debut today. Manus, over to you.
Kailey, good to see you. Yeah, Khalid al-Hussan, he is the man that navigated the Tadawul exchange to an IPO. Khalid, good to see you. A monster opening, up 23% on the opening, giving a little bit back. This was very well taken by the retail community. Do you expect now to see institutions perhaps take a little bit more shares? Are you expecting some pillar investors to join the roster?
It seems we are having some issues with the audio for Khalid there, Manus. But as you say, this was a very big opening move. And the question now is really, how is it going to perform on the back of this as we see maybe institutions getting into it, Manus?
I think we've sorted out the comms. It's a trifecta from New York to Dubai to Riyadh. We're global. Let's get back to Khalid. Khalid, good to have you with us this morning. Well done on the IPO. As I was saying to you before we were interrupted, look, monster trade for the retail investors. The institutions got scaled back. Question, do you see more appetite coming from the institutions? Are you expecting institutions to build their positions in the Tadawul? Good morning.
Good morning. Absolutely. You know, looking at the offering period, we have seen a great demand by international as well as local institutional on our book, where more than 120 times coverage came from institutions. You know, retail have been and continue to be an important element for our business and the revenue we generate as a group. So that's why there was a clawback of 30% to retail in our offering, take into account that we have over 30% of the company. So absolutely, the market is an opportunity for institutional investors to build positions on the company. What we have seen and observed in our meetings, in the early look and the offer meetings, very great positive feedback by institutional investors to be part of our book.
Be careful you don't get yourself an activist, as they did in this country recently. Khalid, look, I know you've already said to the market that you don't see a major gap between Saudi and the international markets. We've gone Monday to Friday. You are the bigger stock exchange by size, perhaps, and liquidity. But this pivot by the UAE to Monday to Friday, do you see that as something which could risk perhaps putting UAE and Dubai at an advantage for capital markets and flow of capital relative to you?
We have been through this before. I think on the changes, weekends used to be Thursday and Friday, and now it's Friday and Thursday. What is important for us is how do the international investors see this? Is it a gap actually between the Western markets and the Saudi markets? We haven't seen that concern from international markets or international investors. Actually, in some of the cases, it is an opportunity. If you look at the settlement of T+2 to T+3 in several markets, sometimes this is an opportunity for them. Now, having said that, we always keep a very close eye on changes around us. That includes our trading hours, that includes our trading days. But always you have to look at this. This is a full ecosystem. This is not a capital market only. The financial sector is a major player on the business we do. Settlements, transfers, all of these are very important. So this is something in a decision that has to be assessed by the government and the kingdom wide. But as we speak now, we haven't seen or sensed any gaps in our current structure for international investors.
So you haven't, to this point, given serious consideration to switching to a Monday to Friday operation?
I think this decision is above my pay scale to decide on, because it's again, it's an ecosystem. It's not a capital market decision. But what I can confirm, and over the last 3 years, I haven't once seen this as a gap or a concern by international investors of this one-day gap between the markets.
So, Khalid, there's a frenzy for IPOs in this part of the world. The list just rolls on. How deep is your IPO pipeline, and what are your top sectors for 2022? Cheer the investors that are long your stock.
So deeper than ever, I would say. I have been with the exchange for 15 years. I haven't seen the pipeline like this. Great demand to both equity platforms that we have, the main market and Nemo. Has been a very successful IPO year for us this year. And I think based on the pipeline we see, it is going to be even better next year. Diversified sectors. We see newcomers to the market, technology firms, healthcare, education. All of these are newcomers to our market, which is going to help diversify our sector offering. So we're looking at it very with an optimistic eye that this will add a lot of depth to our market.
To Bloomberg's Manus Granny for bringing us that conversation with the CEO of Saudi Arabia's Tadawul Stock Exchange. Thank you very much for talking to us. Now, the earlier studies on Omicron are in, and the glimpse they're providing is cautiously optimistic, while vaccines like the one made by PFIZER and BioNTech may be less powerful against the new variant. Protection can possibly be fortified with boosters. That's good news, as new data out of South Africa shows the strain has spread quickly in a short period of time. Joining us now to discuss how psychology can help shape COVID policy is Anne Phoenix, Professor of Psychosocial Studies at University College London. Good to speak to you, Anne. And I want to understand a little bit about how we respond to rules, but also how we front-run rules, how we adjust our behaviour before rules change based on our own assessments of risk. And I'm asking you this because there's been lots of talk today here in the UK about whether we're going to see further rules being brought in. Of course, Omicron has been talked about for the last 2 weeks, and I wonder if we're already seeing people adjust their behaviour, working from home, not making trips where they don't need to, because of the emergence of this new variant.
One of the things that has become clear is that people are stopping some bookings at the moment, so that those who had intended to go to various social gatherings are actually not doing so. Maybe 10% of bookings have been dropped at the moment. And what it indicates is that people are very thoughtful and that they really want to do the best for those around them as well as themselves, so that they do their own thinking. And they do this because they feel that they belong to communities, they belong to the nation, and so that they want to do things that are good for everybody as well as for themselves. And they've seen over the last year what's happened with COVID, and they're wanting to avoid the same sort of things. So the issues around trust and feeling that they can trust the information that they're getting, but actually wanting to be helpful, I think matter a great deal. And that is important to remember, because quite often politicians say, I don't think that people will go along with restrictions because they're fed up with them. And that's not the case at all.
Well,
if they're convinced.
And I have to say, I have seen thousands and thousands of people gathered around this Brandenburg Gate behind me who prove the contrary, who are not willing to go along with restrictions. These are the anti-vaccine protesters who don't care about the protection of others, who aren't willing to take the vaccine in order to reduce the severity of this pandemic. We see that in Germany. We see that in the U.S. Surely you see it in the U.K. as well. So how can you say, you know, as a blanket statement that people want to do the right thing for those around them?
I think that that's a really important point that you bring up, and anti-vaxxers are mentioned all the time. And there are indeed super spreader events, people getting together and so on. What we have to remember is that that is, although it looks dramatic on the television and so on, it is a minority of people. Over the last 20 months or so.
But it's a huge minority. We're talking about 30%, right? 40% of countries with hundreds of millions of people. So it's not like a minority, like a few thousand. We're talking about what? How many anti-vaxxers do you think there are in the Western world?
That's really hard to estimate. We can look at the people who've had vaccinations, and we know that, for example, in Britain, over 90% have had one vaccination, but that we fall a bit short at 68% with second vaccinations. Around the world, more people have chosen to have them. So in percentage terms, there are a lot of people who've had vaccinations. Undoubtedly, when you talk about the numbers, there are a lot of people who've not had vaccinations, but it would be a mistake to assume that they're all anti-vaxxers. Yeah. And that's where I think behavioral psychology helps, because we know that if we take seriously people's concerns around why they're not having vaccinations, that we can actually increase the numbers who do. It's not a fixed number, unlike anti-vaxxers who are a minority, that people do change their minds and do become vaccinated.
So how do you
I'm not denying that there are anti-vaxxers, but it's not the whole story.
But Anne, how do you use that behavioral psychology to then put together a policy prescription? Do vaccine mandates, for example, work, or does that make people dig in their heels even more?
I think that it has two effects, because people are not all the same. For those who are thinking already they will at some point get vaccinated, then the mandates do help them to become vaccinated. Others think, no, the reasons that I don't want to have the vaccination, or I'm not sure yet, are too important. And we've seen in Britain when, for example, care staff have been told they have to be vaccinated, that some who are very committed to their jobs, who've done them for a long time, have chosen to leave instead, causing perhaps some greater crisis in care. And the reason that they've done that is because they worry about health effects. The vaccines are still relatively new. Today is a fantastic day. It's a year since the first vaccine was given to someone in Britain, the PFIZER vaccine. But that's a year, and some people feel it's still too soon. Some people feel that the side effects are not worth it because they're young and healthy and so on. There are different reasons we have to take those seriously, and mandates don't do the work of making everybody get vaccinated.
All right, thank you so much for your insight and reminding us of that important anniversary. Anne Phoenix, Professor of Psychosocial Studies at University College London. Appreciate it. And now a look at what else we're watching today. I am watching economic data here in the U.S. JOLTS. We are still expecting something like 10.5 million job openings in the month of October, and that number is bigger than the number of people who are unemployed. So it all speaks to the tightness of this labor market and informs perhaps what the Fed is going to do next week, Matt.
I have to say, I think that is probably one of the most interesting things to watch, not just today, but in general. The JOLTS numbers have been absolutely fascinating. So I'm with you there. I'm also watching, since I'm here in Berlin, the new government. Olaf Scholz is being sworn in as a new chancellor. This marks the end of a 16-year reign for Angela Merkel. She must be relieved, and I'm sure she's going to totally chill after this. But Scholz has a lot of work ahead of him. He's got a big coalition to bring together, and he's got a lot of anti-vaxxers, really a very large minority here to deal with, and possibly will put mandates in place.
Yeah, maybe Angela Merkel gets to put her feet up or lie flat, as they say in China. I'm watching the latest on the virus and the vaccines and any measures to be introduced here in the UK to push back against the spread of Omicron. That is certainly something that is a topic of conversation here in the UK. So we'll watch to see if we get any new news there. More Bloomberg Surveillance is ahead. This is Bloomberg.